Welcome back, everybody. Sive Morten here with the Forex Peace Army.com. Let's take a look again on euro currency. So yesterday we've got CPI numbers. They were not really impressive, slightly lower than expected. So nothing actually very interesting, especially taking into consideration how strongly they have been manipulated in the recent reports. So a lot of components have been excluded from the calculation, and that's why we have to be with a healthy skeptic on this data, because a lot of other information, a lot other data points that inflation mostly stands stubborn. It relates also to midterm expectations. 1 year forward rate, 5 year forward rate, inflation stands around 3%, plus minus 0.5%. So probably that's also the reason why we have this kind of direction on the market. So generally speaking, I do not see any big changes that could have to make us to change our trading plan. So context here remains bearish on a daily chart. On the 4-hour time frame chart, we have the one risk factor that has been formed recently, and this risk factor is this grabber. So actually, with this drop and the market has accelerated on some data release, we've got the bullish pattern. But I have some, I'm not sure that definitely will work, just because drop was relatively fast here, and that might be just a result of the trend changing. So here market has changed the trend into bearish, as you can see by the MACD line, and that was the first touch of this area with the MACD. As a result, we've got this byproduct of the grabber. I do not know actually, so maybe it will work, but in this case it will be not quite in a row with all this stuff that we are talking about. So if somehow we will see upward breakout and that market is breaking lower lows, lower highs tendency, that might be the reason to suggest that retracement is over, so we could get strong action. But for now, based on this performance and that I see here, I'm not ready to actually do this. At the same time, if you're a scalp trader, you trade on the 5-minute chart, for example, theoretically it is possible to you to consider a small long position just because you have here another pattern in place. So here's might be the butterfly, but on the hourly chart, with this drop out on the confidence that we said, actually market has completed Gartley's triple to buy. So you can see this AB equals CD target has been completed. So it means that here maybe some minor pullback could happen. This is of course not the subject for trading on the 4-hour time frame chart, for example. This is only for very small time frames. And that could let you just to space to protect your position. And if somehow grabber still starts working and situation starts changing, market will jump above the stop, you will be just in very good position. But as I said, in the current circumstances, I'm not sure that definitely will work. Even on the hourly chart, you could see overall price shape. So you can see here is some gradual retracement, and then we have acceleration leg. So theoretically, CD leg should be over at this point, but it is over much faster. In such circumstances, it usually indicates and shows that some bearish strength, and it suggests that market could keep going lower. It's actually what we're counting on based on the overall structure that we have on the 5-time frame chart. So this decision is up to you. Personally, I do not want to take position here, mostly because I'm not trading on so small time frames. On the 4-time frame chart, the final point that I would like to mention, theoretically, we even could suggest here some kind of the free drive pattern, because if you measure the extensions, they stand relatively close to each other. So for example, second drive stands precisely at 127 extension, so kind of the butterfly slightly lower. On the second extension, we see that the combination stands with 127 and our butterfly and 1618 of the first drive is very close, so typical for 3 drives. So from that standpoint of view, that might be also kind of a free drive. So currently the overall bearish things and actually how market performs, for me it's overwhelming. The actually some potential grabber here that's even not quite logical in a consequence in the sequence of this overall performance and overall swings, and in taking a look at the nature of the market performance, market mechanics, how it looks like. So that's been said, currently I think that we should not change anything, just keep this bearish context valid, because we do not have a lot of signs that something is really changing. And just let's keep watching on the 16 even area. So as we said previously, 1595, 116 or 6. So this is the first destination points that market theoretically should try to complete. And then we'll see what will happen.